Good morning, everybody, and this is your S&P 500 day trade setups for today. So we did not get a monthly close above 4,000, and basically another inside bar. So it's engulfing bar, inside bar. If you follow the pattern, should be another green month inside bar, but also it could be the start of a rejection, and that rejection level on the monthly is right here at 411, 4116 or 4117 actually. That is the rejection area, but this 4,000 is still critical. Trend is up at the moment in the monthly. Oscillators have crossed over, but no, not both of them. One of them has, the other one is about to cross over. So I'm a little bit skeptical of what we see right now. Looking at the 8 hour, we've got a crossover. We're below the 155. That is an indication of a trend reversal. So the previous trend was up. It does look like we have an 8 hour trend reversal that is brewing. My only concern here is that the buyers are still coming in down here. So let's just get through the time frames before we start second guessing this at the moment. So from the 3 hour perspective this week, big up, big down. We're basically just hovering here, to be honest. I mean, it is a fairly big hover, 400 points, 1% swing. But when you look at this on the hourly and look at the price action in the days, it's big up, big down. Yesterday was big down, big up, big down, big up, big down. So with the trend is down. It's just messy, the fact that we're above the moving averages like this. But for as long as we stay below the 155 EMA, trend is down. That is an important factor that you need to pay attention to. And the second thing that you need to pay attention to at the moment is that it could be a retest of structure for a move to the top of the range, or it could be a move up to reject this kind of area here where we are now at 39.74 for an attempt to break through to the downside. Me personally, I am sitting on the sides here. There's nothing here that indicates I need to be looking for opportunities just yet. Don't really trust what I'm seeing, and when I see this on the 15-minute, that's what drives me. As I said yesterday, when you start moving above and below the moving averages on the lower time frames, that is just pure confusion. Down, up, down, up, down. This is algorithms that are basically hunting retail traders, number one. So retail traders will be trading strategies on breakouts, multiple different strategies that we trade, and algorithms know this. And when there's nothing to drive the market in any direction, algorithms will then basically force these ranges. And 9 times out of 10, you are getting caught out. So this is just an indication I need to be very cautious. If this rejection area, and I'm just going to add one more level here, because we need to have 2 in. So between 39.77 and 39.74, if we get a rejection here on the 15-minute, it's well worth sort of jumping in. You're going to have a 100-point stop loss, and you're going to have a 180-point gain. I would be looking for this current low of the morning, at least for now. I wouldn't be too keen on holding on to anything any longer. One thing I do want to just do quickly here is just go across to a daily chart here. Clean up what we have here. So this is the daily 200 moving average, purple line here. Have a look where the oscillators are at the moment, and you can see we have spent the last couple of days of the month rejecting that area. But you can see how that plays a big role on long-term strategies. You can see how we've stayed roughly around the 200-day moving average for quite some time. This one here is a 20-day moving average, but irrelevant in this picture. So the question is, are we going to reject this, or are we going to sort of recover? And you can see that this 200-day moving average is at the moment 4007, but it's in this 4,000 range. So that is kind of what you need to be paying very close attention to, and you'll see that is kind of lines up quite nicely here with our moving average strategy. And if you come down through the time frames, you're going to see how it lines up with our moving averages as well. Anyway, so we are sideways. We are at some major moving averages, some major areas where a lot of traders on the from a long-term perspective, they use as a yardstick, or whether they're in a downward trend or an upward trend. So bottom line is, for us to start looking for moves to the upside, we need to be above 4,000. At this moment in time, anything below 4,000 we should see as potentially the opportunity to short. But I would prefer that we had a bit more structure on the 15 minutes chart. So I'd want to see a rejection of a zone with the moving averages lining up with the oscillators, like what's brewing now, and for another move to the downside. So that's kind of my confused outlook for the day. But looking at the hour, this just says be careful, stay away from this until we figure out what direction we're going, because right now we don't, and we've got a lot of data coming out now as the start of the new month. So could be anything. Yeah, it could be any catalyst that could drive us at the moment. But I think it would be wise to stick to the low time frames if you can, and just pay attention to structure. Just trade your structure. And at the moment, you want to be moving with the trend, which is down on the hours. So you're looking to sell off structure wherever you see the structure. Anyway, that's kind of my long-winded, confused outlook for this morning. I'm personally probably sitting on the sides, not going to even bother trying to, I won't say confuse myself, but frustrate myself. And I would advise you to do the same, unless you have got the time on the lower time frames. Anyway, that's kind of me. I hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.